All right, so let's begin the show. And cyber scams or cyber frauds are on a constant rise. But talking about online financial frauds, they are not only getting innovative but are regularly making headlines. In a recent case, a techie from Bangalore has lost almost 50 lakh rupees via WhatsApp and Telegram scam. So what exactly is this case, and what you as a viewer need to take note of because of what? Because WhatsApp and Telegram clearly are few one of the most used platforms. Let's join in Nitin Bhatnagar PCI SS Director India. Nitin, good evening and welcome to the show. So there's a new scam that has emerged, and whether it's new or not, I think that information we'll get from you. But then WhatsApp and Telegram are also not missed by the cyber fraud scamsters or hackers. So let's just discuss about this scam and what has happened according to you.
See, I think it's a very simple case where, you're just getting so comfortable with someone who you are not known to. So for these fraudsters, it's a very simple three-step game. They try to become so friendly with you. They will try to reach out with some fake name and some company name, and will try to message you on your Telegram or WhatsApp, and with some very very known name to you and which you can connect. It could be a name of someone very close to you, and they will make you feel like so comfortable talking, and they will try to find a ways by talking to you, what is a need of an hour for you, right? It may be a job, or it may be a investment opportunities that they may want to throw across to you, and they probably to build that kind of friendly intro. They will try to throw some really very lucrative offers to you, asking you to do some simple task of rating merchants on Google Maps, and will offer you some very small denomination of 100 rupees, 200 rupees by just giving 5 stars. People fall prey to it, and it's more like when you try to do some kind of friendly intro on a social media, you tend to fall prey to these kinds of gimmicks being used by these fraudsters. Second step that these fraudsters do is try to earn your trust. Now, when you have already in the intro, you have given some 5-star ratings, they paid you some some small denomination value to your account. You are trying to build that trust with them, and you are trying to believe in them, and they will ask you different questions, and based on the analysis, these fraudsters are becoming very smart day by day, and they will try to find out a way. For example, they may find that you are really interested in getting a job in a marketplace, and they may try to come out and try to help you out. That's where the trust, where you fall in prey to these unknown fraudsters, make you victim to such amount of value which is going out from your account in a just a matter of few seconds, because that's where the scam starts, where you build that trust, where you have shared all your personal information, and you just fall in prey to their gimmicks of answering questions and giving those out details. And by the time you realize that you have given all that is actually not required, but you have given that information, and when you just get a message back on your phone, saying that your bank account has been debited with 1,000, 2,000, then 3,000, 10,000, 13,000, 20,000, and that's where you realize that you have become a victim of some kind of a fraud in favor that person committed to you, that they are going to offer you a job, or it could be investment opportunities that they may want you to invest in. And that's how the entire game of this WhatsApp and Telegram frauds happen. So very simple, but the people have to be really very, very cautious, Kavita.
So, Nitin, one important thing. So, these people has reached out to the victim on WhatsApp and Telegram. So, are we trying to say that there were investment strategies or investment avenues which were being discussed or maybe sold only on WhatsApp or Telegram? What exactly has...
Absolutely.
Yeah, okay.
I get so many messages daily, Kavita, invest in, these schemes. There are been been offered by the banks or the Reserve Bank of India, or probably in the name of many, and we have to be really very cautious. You will not be getting these kind of investment options, or probably the opportunities on these WhatsApp or Telegrams, right? You have to go on to the genuine websites to get these information out, right? And use the genuine sources to get the information. Now that's what critically is which is happening is there. People are trying to send you some kind of lucrative offers, and you are falling prey without having a second thought. These lucrative offers can fall you in a trap of these fraudsters, where you may just spend money, and these fraudsters may gain access to your social media accounts or to your bank accounts, and try to get the money out, and make you a victim of the cyber fraud.
All right. So now, what are the things that one needs to really keep in mind? Because here we are just talking about financial frauds, which definitely is a very severe case as well. But then, what could be those red flags, by which you would identify that you could just fall prey to it?
See, I think red flags is very simple. You have to be very, very cautious of who you are interacting with while you are on social media. I'm not saying that you should not interact with the people online. It's a virtual world. We all have requirements. We need to be really very fast to interact with these people. But I think what we need to be very cautious is that do not trust immediately anyone. I mean, I always say trust, but verify. If you're not verifying and just blindly trusting someone, is going to make you a victim of it. And the second important thing that you need to be cautious is that if somebody started asking you for your personal information, which is your financial information or bank account details, or in a very insecure channel like WhatsApp or Telegram, you need to be really cautious. Your ears should be open when you hear that somebody asking you your personally identified information, which consists of the financial information too, including probably they may ask you for your UPI ID, they may ask you for your credit debit cards, they can ask you for your wallet details, anything. Just be cautious of those triggers these cyber criminals may want you to do. They may even ask you, they may have initiated some kind of a transactions already. They may ask you for an OTP. They may ask you for some kind of a push notification, authentication through a mobile app. There are many ways these fraudsters will try to dupe you. So you have to be cautious. If you have not requested for any kind of authentication details, which is OTP or a push-based notification message on your mobile app or on any kind of an authentication app, you have to be really, really you have to be cautious, and you should get alert immediately before you divulge that information to anyone.
But Nitin, there is no way we can stop these messages from reaching us?
See, you have to probably, there is no way as such, because if your number is just publicly available out there in the marketplace through various ways, because we are so unknown. When we go to a shopping mall, we try to fill the details with a mobile number. We go to the shops, we give our mobile numbers. There's a lot of avenues for these fraudsters to collect these data points, right? So it's very difficult to stop that. But I think only thing that you need to block those numbers immediately when you start getting such kind of a spam messages. You have to highlight these messages as spam and make sure that you block those numbers, so that at least for time being, you're not being flooded with these kind of spammers with these spam messages. I think that's the only way that you have to be cautious on, and more importantly, if you're getting these spam messages, just ignore them. Simple ideology is to ignore these messages, and just work on the original source where you can get these kind of relevant information.
And more importantly, financially literate yourself. Even that's a very important aspect of safeguarding yourself against all these financial frauds. But then every time we talk, there is something new, in the cyber world that's been created. We come with a new kind of a hack, we come with a new type of scam. So talking about financial frauds, Nitin, what's in trend these days? What's been innovated by these hackers and scamsters?
See, I think most importantly, I think the hackers are out there. Their only intent is to get the financial gain, and I think they will find different avenues to get the money out of your accounts. Now, the hackers are innovating. It's not like they're not even innovating. They're innovating. We talked today something. Probably there are courier scams. There are the scams through sending a malicious link onto your mobile phones on your WhatsApp messages. There are cases of sextortion which is picking up, where the people are trying to they are becoming victim of these kind of frauds that are happening through these social media platforms like social media, Facebook, Messenger, and the WhatsApp. So there are different kinds of or magnitude of frauds that are happening today, and we can't just really classify them. What is important for your users to understand is that while you are online, you have to be really, really very cautious, because these fraudsters can innovate and try to dupe you to gain the financial gain from you at any length and strength of that you're thinking of, because they are there to just make you a victim of a financial fraud. And I think there are frauds which I keep hearing on, which is job-related scams which are picking up because of unknown reasons why this is picking up. But the job-related, they will come up with an lucrative offers of trying to offer you some kind of government jobs, or probably the jobs outside the country, and people are getting really victim of these kind of frauds. So I think that's where people have to be really, really very cautious.
Any way people can get their money back, especially the financial frauds victims?
Can you repeat, Kavita?
Can you get the money back? The financial fraud victims, where can they reach out?
So you have I think important thing is that how fast you are able to report these kind of frauds to your bank, and I think the government has also given a number where you can call and just immediately report these kind of financial frauds, so that the money where it has been credited, they can block those accounts, and they can start the investigation. So more importantly, sooner the better you realize that you have been a victim of a cyber fraud, you have to report it. Reporting is very, very critical. You can also go on report on cybercrime.gov.in, so that the action can be taken.
All right. On that note, thank you so much, Nitin, for being on the show today and helping our viewers with every aspect of financial fraud. So all you have to do is just safeguard yourself, educate yourself, and just beware of these cyber scams happening around. On that note, let's take a quick break. Post that, let's talk about investing in these volatile markets. With me will be Shweta Rajani from Anand Rathi Wealth. And in case you want to share your investment query with us, you can WhatsApp your question on 865-797-4571. That's our exclusive WhatsApp number. You can also email us your query on themoneyshow@etnow.tv. So more on your investments and financial planning after this break. Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and let's talk about investing in volatile market. Markets are clearly volatile, and we're at a level where a lot of investors, especially SIP investors, must be thinking to invest or to not. But you don't have to worry, because we've got you covered. And let's talk more on this. I have with me Shweta Rajani, Head Mutual Funds, Anand Rathi Wealth. Shweta, good evening and welcome to the show. So clearly, looking at the fresh levels of the market, a lot of investors must be thinking as to be their regular investment should be continued or not. A lot of investors, especially the matured ones, would be waiting for this kind of a fall of volatility to, enhance their investment amounts also. But then let's talk about the fear part. What, according to you, are normal questions that investors might think of looking at the market condition right now?
Yes, Kavita. So like you said, markets in the last few days have been pretty much volatile. So just to give you certain numbers, we were at, from March till now, if we see Nifty 50 itself had run up by more than 20%. And in the last few days, we've seen a correction, which is of around 6%. Clearly, the questions that is coming in somebody's mind is looking at the geopolitical situation, right? The Israel-Gaza war, what could happen to that? And therefore, the impact on Indian markets. That's one question somebody has in his mind. The second question, of course, is with the US debt situation and the interest rate scenario there, what could be the likely impact here? We are seeing the bond yields increasing in US. So, how would global factors impact the Indian market? On the domestic front, there have been questions on valuations to a certain extent. So these are the common questions that I'm seeing, clients asking or thinking about. So therefore, what actions they should take on the portfolio.
Shweta, as per your house's view,
Yes.
what other levels within which the market would you be seeing trading? What are the red flags that an investor, in order to continue that investment, should be considering now?
Yeah. Kavita, I'll give you certain numbers here. Now, when it comes to equities, right, short-term volatility is the character of the asset class. So if I just give you some numbers, I did this study for the last 22 years. And every year, from the peak to the trough, there seems to be a correction. Now, if this is a normal year, right, when there's no war situation, there's no interest rate worries or COVID-like situation. Even in those years, the average correction one has seen is a 13%, which roughly takes 3-4 months for markets to rebound. Of course, you could have situations like a COVID year or a US financial crisis where the numbers could have been higher in terms of fall. So the point I'm trying to highlight here is that if you see a 10-15% correction in the market, that's a normal correction. You need not worry and therefore do not take any action on the portfolio. If you have equity, then continue with your allocations. Look at those dips, and those should be opportunities for you to invest rather than fearing a correction to the extent of 10-15% in the market. Because over a longer tenor, as long as the fundamentals are in place, which is the current situation, right? After all of this, India is expected to be to be the fastest growing economy. So you'll have your nominal GDP growing at 11-12%, and that would translate into the equity markets over a 3-5 year holding period.
All right. So now also let's consider a scenario, Shweta, okay? Because we know it's a time where people can actually go for unit shopping, which means invest. And even if you're doing an SIP, do not stop your SIP. But I want you to explain a scenario where an investor who invests lump sum, looking at market trajectory, market condition, or maybe, the volatility like this, is a habitual lump sum investor, and an investor who does an SIP. Who benefits out of the situation the most, and why?
Yeah. So, let's take a scenario where somebody's been a SIP investor. So did not worry about the market scenarios, and every month went ahead and did those SIP investments, let's say for the last 5 years, right? You've had 18-19, which was not so good year. You've had COVID. The average investor in this case would have still made a 12-13% per annum kind of a return. Now, somebody, let's say, who tried to time it and went correct. So, he was the most luckiest investor who timed it, and every time he timed, he went right. The returns would have been 18% per annum. A reverse situation where somebody was unlucky, and every time he invested, let's say he invested at the peak level of that year. In that situation, his returns would have been a 10% per annum, right? So the point I'm trying to say is you're not missing out whether you try to time it or, you don't go right with your timing. 12% is anytime better than sitting on sidelines worrying about not investing. So 10%, 12%, 18% if you go right. Either which ways, the asset class that you be into would give you more than sitting on sidelines and earning a 7% on your debt portfolio.
All right, let's talk about increasing your SIP amounts and the kind of benefit one might get by increasing their SIPs during this time of volatility, and also for all those investors who might be just considering coming out of an investment, owing to a goal which might be like just few years away. These are crucial times because they also want to wind up from their investment in equity and maybe place their money in fixed income. At such timing where there's market volatility, should they just hold on for some time, let the market stabilize, and then come, initiate an exit strategy from an investment instrument which is equity related?
Yes. So, let me break it up into tranches. Let's say you have a goal where you needed the liquidity over the next 3-6 months. Then I would say you can redeem and sit on this, sit on cash, because this is the money you can't avoid. You need it for, whatever obligation or liability you may have had because it's a tenor which is just possibly 6 months from here. But if you have a goal which is, let's say, 1.5, 2 years away, then don't touch your equity investment. You can continue, or a goal that you had for this year, which can be extended, let's say for the next 1.5, 2 years, then again, extend that horizon of the goal and continue with your equity allocation. This will help you navigate the volatility that one can expect over the next 3-6 months and, get a higher return benefit. And of course, if you have goals which are 3 years plus apart, then even if I would say use this opportunity as you are seeing in the correction and try and top up your SIPs. If you have, let's say some debt which can be shifted into equity while keeping the broader asset allocation in place, you must do that.
All right, let's also, Shweta, look at investment strategy across market caps, looking at the volatility.
Yes.
Any specific changes or shuffling that needs to be done? Any specific winding up of your positions in debt or maybe rebalancing that exposure? What would you suggest?
Yeah. So, talking first about the market cap allocation, looking at two factors, the corporate profitability of large cap, mid cap, small cap, where, I would say if large caps are expected to see a profit growth of around 15% for this year, mid caps around 17%, small cap, the numbers upwards of 20%. Profitability numbers tilting towards small than mid. Valuations, I would say, given the recent correction, large caps are fairly priced. Small cap has gone into an attractive zone. Mid caps, I'd say, slightly on, fair value to expensive zone kind of a range. So in such a scenario of 50% to large, 20 to mid, having a 30 small cap in the portfolio would be a good market cap mix. So, you can look at realigning your portfolios to this market cap. In terms of asset allocation, right? If you have money which is more than 5 years plus horizon, then you can have an equity portfolio which is 65, 70%, or to that matter, 75% equity. And if you have monies which are needed 10 years plus, then having a slightly higher equity, even to the extent of 80% equity would be good to have in the portfolio. So, look at your asset allocations. Like I said, 5 to 6 years, 65 to 75% equity. If more than that, then you can have 80% equity. This is a good time to enter if you have a slightly heavy debt on the portfolio.
So you don't really are on the side of having a higher exposure in mid and small cap. Is it because the valuations in large caps are very attractive and maybe we will see a lot of steam going off mid cap and small cap now? Is that what your analysis is?
So I'm balancing it out at a 50-50, 50% large, 50% mid and small at this point of time.
Okay, all right, got it. All right, so this is the kind of strategy one need to adopt looking at the market conditions. But then what about your mutual fund portfolios? Well, if you're someone who's waiting your question to be answered, we have you covered because we'll take a break. And after that, we'll be getting into our query sessions where viewers will join in, ask their portfolio queries to Shweta. And in case you are one of them, you can WhatsApp us your question on 8657974571. You can also email us your question on themoneyshow@etnow.tv. So let's take a quick break. Post that, more on your financial portfolio, especially question answer session with our viewers after this break.
And once we execute those pipeline, the margins are bound to go up from here.
Right, Dilipsa, this is Vinny joining in the conversation as well. Good afternoon to you as well. Let's also talk about, obviously bounce back in the margins is what we're expecting also furthermore. But on-ground situation in terms of demand environment as well as your order book, how is that looking like currently? What is your order book positioning? And also in terms of the unexecuted order books, how is the execution progressing there as well?
So, we have an unexecuted order book position of around 896 megawatt, which is now inching towards almost like 1 gigawatt. So if you take that, order book and the work in progress, that's, working at a good speed right now. And we expect a significant amount of closures during the second half as well, which translates into revenues for us.
If you see, sir, India aims to reach around 450 gigawatt of installed renewable capacity by 2030, and solar is expected to contribute nearly 60% of the same. Given this backdrop, what over the next say 3 to 5 years time span, how do you aim to capitalize on this opportunity? How much top line growth are you penciling in, and what are your expansion plans?
We are right now present dominantly in EPC and IPP space. We have completed about 40 megawatts of IPP and we have completed 264 megawatts of EPC. The opportunity that is sitting with us is almost like 70 gigawatts per annum. That's a very significant amount for a good number of players as well. So we are expanding and we are working in both government and CNI space. Right now, our majority of order book comes from CNI space, and we expect this to go up significantly, coming from both the 70 gigawatt which government has announced. So I don't want to put a number on the capitalization that we will do, but we do expect the market to benefit us, the large pipeline that is coming in.
Actually identified green hydrogen as a new business opportunity and also are working on expanding in the O&M market as well. What is the strategy here, if you could explain our viewers that?
See, when we undertake this EPC project, O&M comes naturally to us because of our pedigree in this space. We have been here since 2008. So clients understand the value that we bring on table. So as we speak, we have, little under 500 megawatt of O&M orders that we execute. And hydrogen, we have undertaken this pilot, this the EPC, and we identified this in future to benefit us. So therefore, we have taken this one project, and once we execute this, we will take it in a long way.
Okay, Mr. Panjwani, thank you so much, for joining in with us this afternoon on ET Now, giving us an understanding on the numbers of the company as well. And good luck to you as well. That was the management of RE Renewables for you all. But let's move on and bring on board Shrishti as well as Harsh, because we have a lot of earnings today. 7 nifty companies. One of them is yours as well, Somit. But before we come to you, let's go across to Shrishti. And Shrishti, you're going to tell us about Maruti Suzuki and what are the expectations there?
A strong quarter is expected from Maruti Suzuki this time around. Why so? Because the company has been doing well when it comes to the volume growth, specifically on the back of their SUV sales. Some of their new model launches have gained traction. They have been the market leader in the SUV segment now. And along with that, when it comes to the pricing, they have increased the prices and they have been offering some discounts in their lower end models as well. So that also pushed the volumes for the company this time around, wherein the volume saw a jump of 7% on a YY basis, and sequentially they were up 11%. So all these factors will come into play when it comes to the overall number performance. On to the revenue front, we are expecting a jump of 15.5%. 37,349 crores is the estimate there. EBITDA is expected to be up 38% YY at 4,113 crores, and even the margins are expected to be up from 9.2% in Q1 FY24 to 11% this time around, and this number will be the key to watch. And lastly, on to the profit figure, a jump of 24.5% is what we are expecting. 3,095 crores is the expectation there, but definitely on the back of a better product mix and also from the Japanese yen depreciation. So both of these benefits will also kick in for Maruti Suzuki, but the key to watch will be the management commentary onto the outlook going ahead, because post the festive season, how the company and the leader in this segment is seeing the demand trend shaping up, as well as what is their outlook on production as well. So we will be monitoring that.
Well, margin will be the key number to watch out for when it comes to Maruti. But Harsh, how are SBI Life numbers looking?
Right, so you're expecting to see AP number to be around that 5,050 crore mark. That's a 29% uptick when I'm looking at it on a year-on-year basis. Value of new business expected around the 1450 crore mark, which is again a 17% growth. Value of new business margins are expected largely flat on a sequential basis, down from a year ago. A year ago it was at 31.6%, likely the top there, and therefore you're seeing a bit of a decline. Of course, non-par is expected to make a recovery in this quarter. That was the expectation, but have to wait and watch as to whether that really plays out, and that's where the street's eyes will be at. Also, with regard to what the forward margin guidance is, of course, new leadership coming through, and therefore where will that forward guidance be with regard to margins will also hold the key. How is distribution mix really evolving will be also a key. The dependability on SBI has always been a problem where analyst community is concerned. So that will also be something that the street is looking out for, and the shift with regard to the product mix as well. Whether non-par is really growing well or not will also be on the radar of most investors.
Well, thank you, Harsh, for giving us those details. With that, let's slip into a short break and we'll be back with more news on the other side.
Co-powered by AU Small Finance Bank. बदलाव हमसे है.
In association with Bikaji, Amit Ji loves Bikaji. Bhujia Namkeen, sweets, popper, snacks.
टिप चाहिए? पैसा लगाना है? तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ. डूबेगा नहीं, चलेगा भी नहीं, कोई खा नहीं जाएगा और मिनिमम 30 साल का रिटर्न देगा. अब इससे बेटर इन्वेस्टमेंट है? तो बताओ. सेंचुरी प्लाई क्लब प्राइम. रहो बेफिक्र.
Listen, last anniversary you promised me that we'll buy a new house.
It's festive time, let's get it, na? 3 BHK. I want my own room.
HDFC Bank Expressway is here. We'll get a home loan in no time.
Then let's get a place with a nice terrace. Let's spread joy this festive season with instant solutions for every reason. With festive treats, festive cheer instantly here. HDFC Bank presents Expressway, where you can get express home loan in an instant.
आपकी दुकान ऑनलाइन ऑनलाइन.
Building digital public infrastructure for digital India. Protean. Change is growth.
सबका ज्ञान करे परेशान. That's why download HDFC Sky, a new age all-in-one app जो बनाए आपको अपने दम पे एक्सपर्ट. क्योंकि यहाँ सलाह वही जो आपके लिए सही. HDFC Sky, बनो अपने दम पे एक्सपर्ट.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
आगे बढ़ने की चाहत किसे नहीं होती. बल्ब LED बनना चाहता है, दीनदयाल DD बनना चाहता है. जो आज ठहरा है वो कल दौड़ना चाहता है, पर चाहत को हकीकत में अपने लोन से नए तरीके से बदलता है उद्योग प्लस. अब लोन के साथ एक ही जगह पर बिजनेस की सारी जरूरतें भी पूरी करे आसानी से. तरीका बदलो, बिजनेस बदलेगा.
मैं बोला 75 पर होंगे आउट, पर फैमिली की सिक्योरिटी आई डाउट. वो बोला टर्म प्लान है, फैमिली सिक्योर सालों तक. नो शक.
अब इनका फ्यूचर सिक्योर नहीं पर आपका होगा. टाटा AIA से रहो हर वक्त के लिए तैयार.
छत टपक रही.
अरे शिफ्ट करने वाले हैं ना पापा, बस घर मिलने की देर है.
इसीलिए तो घर मैजिक ब्रिक्स पे देखिए. प्रॉपर्टी की पूरी इन्फॉर्मेशन विद एक्सपर्ट एडवाइस
और 15 लाख से ज्यादा प्रॉपर्टी ऑप्शंस हैं.
गुड. एटलीस्ट मेरा घर तो लाखों में होगा.
आज तो हैट्रिक पक्की है.
This week on the Blockchain Startup Show, we bring to you Ava Labs, an open source blockchain tech powerhouse that is empowering developers to build decentralized apps and enterprise grade blockchain solutions.
Avalanche is a smart contract platform in the blockchain space. It is the fastest smart contract platform and it aims to scale infinitely for any number of use cases, such as institutional or for the consumer space. Ava Labs actually is an entity that supports the growth and development of the Avalanche protocol.
At these times,
Whenever I had ice cream or cold water, I would experience a sharp shooting sensation. So I just kept ignoring it. Even my hot chai was giving me the same amount of discomfort. My dentist recommended Sensodyne. So now I can be completely carefree and sip my hot cup of tea. It really works.
पिछले 6 सालों से हर रोज यही हो रहा है. ये वो SIP है जो चौधरी साहब अपनी बेटी के लिए कर रहे हैं. जब जिंदगी जीने का तरीका ही SIP है, तो जिंदगी के लिए SIP क्यों ना हो?
An investor education initiative by HDFC Mutual Fund. म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है. योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें.
Hi.
Hi. What's that? That's a Manish Malhotra. Not your dress. The cupboard. The laminate is a Manish Malhotra design.
Century Laminates by Manish Malhotra. Fashion for your furniture.
Live it up, live it up.
पानी से भरी बाल्टी जो जल्दी ऊपर लाएगा वही जीतेगा। हर गेम में चैंपियन जैसी पकड़। वही SRMB TMT।
Welcome back, and you're watching Markets at Noon on ET now. Nifty holding on to some bit of gains there. But what's the flashes that is coming on your screen is that Kotak Mahindra Bank RBI has extended the appointment of Deepak Gupta as the interim MD and CEO till the 31st of August. This is according to agencies. They have extended it till 31st of August. So keep an eye out on Kotak Mahindra Bank as well. Extension of appointment of the interim MD and CEO Deepak Gupta till 31st of December. So keep an eye out on that. Let's move on and talk about another stock that is in focus, and that is Max India. This one again on the back of its earnings as well. And when you look at it in terms of the numbers that have come in from the company this time around, yes, we're seeing the losses of the company actually have widened. We're seeing the revenue decline by 15% as well. To understand more on the numbers, let's bring on board Rajit Mehta, MD at Max India this afternoon. Thank you so much, Mr. Mehta, for joining in with us. Now, let's just talk about, you've seen some good traction in terms of the residences for seniors, and this is the highest ever net revenue in care at home. Medcare also, why are you actually seeing a decline in terms of the revenue then overall of 15%? What is the guidance for FY24?
Tara Max Group Company is a pioneer in the senior care space. We are the only organization in India endeavoring to create an integrated care ecosystem for seniors. So the reason why you find the revenues down is because the revenue recognition in residences happens basis registrations. And since we've already sold out all the inventory in Dehradun and Noida, you see a slight dip. But compared to last quarter, our revenues are up actually by 20%, and our EBITDA is now 1.5 crores positive versus a loss of 7 crores in the last quarter. So the reason for the last year dip is just because we don't have any inventory to sell in residences. Otherwise, all our businesses are doing pretty well.
And sir, if you see your projects in Doon and Noida are sold out, how is the launch pipeline shaping up? What geographies are you targeting, and what is the traction you are expecting to see?
So we've already signed up the new project in Gurgaon. The definitive agreements are under discussion now. The binding term sheet in Bengaluru already signed up. Definitive agreements, under discussion. A broad commercial term for Hyderabad also agreed, and hopefully in the next few days we should sign that term sheet, as well. So these are some of the new projects. Gurgaon is about a 0.7 million square feet development, about 288 apartments. Bangalore a little larger, about 1 million square feet, about 482 apartments. And Hyderabad, when it comes to, will be quite large, 1.3 million square feet, about 780 apartments. So on the residences side, our traction on geographies is pretty good. We're also negotiating and looking at agreements to be done or land parcels to be identified in other geographies. Our attempt is always to create about 1.5 million square feet per year under construction. That's our aim. The senior care sector response has been pretty good. Nothing to do with the festive season particularly, but generally I think the concept is more readily accepted now in India. And post-COVID, we saw a change in sales velocity. So we see pretty good traction in the coming few years, in the senior living space.
So also what we want to understand is the losses has narrowed on a quarter-on-quarter basis. But given that the revenue recognition will happen with a lag, like you just mentioned, when would the bottom line actually start moving into the green then?
So it depends on project to project. In Dehradun, if you look at, we're already PBT positive, cash positive. There's a cash surplus of 120 crores, in Dehradun. Noida, and then when we hand over possession and we complete, phase 1 and phase 2, that's when we start recognizing, the surplus that comes in. So we target healthy IRRs in all projects. So it really depends on project to project. On the Tara Assisted Care Services, the investment will